Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Tuesday morning, we are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi and Nigel. Guys, hi, good morning.
Hi, good morning, folks. Nigel and I were away yesterday, but Prashant, you have taken the market in cruise control mode, and bulls are prevailing. And how?
You know, I give it to Reema's green dress, all green attire yesterday. But it was a powerful session.
What a day.
And the market actually just picked up from where it left off on Thursday, which was, on a very bullish note. And the start of the week has been great as well.
How was Easter, Nigel?
Very good. Good Easter. Unfortunately, not a great Easter Monday for the US markets. Ended with sharp cuts, but we'll take it as it comes. So let's get straight to the action.
Absolutely. And, let's just quickly take a look at what things are looking like right from the top, right? I mean, because I think global markets and actually, I shouldn't say global markets, US equities, not just US equities, US assets are under pressure. Equities under pressure, bonds, dollar, everything seems to be under pressure. The big worry at the margin, I mean, it was tariffs earlier, but the big worry now, of course, is Trump-Powell tensions, which continue. It's not new. President Trump has posted on Truth Social, his social media account, calling the head of Federal Reserve always late, too late. I mean, that's kind of he's sort of tried to make that his name for him when he addresses Jerome Powell. Markets are not liking it. Trump is, of course, again calling for preemptive cuts. He's saying, where is the inflation? Powell must cut quickly. Now, market clearly uncomfortable with the current dynamic between the White House and the Fed. Remember, President Trump was asked in a press conference a couple of days back whether, and this is after Jerome Powell and that sort of interaction with Raghuram Rajan last week said that they won't bow down to any political pressure. But Trump was asked about that. He said, well, he'll go if I want him to go. And of course, last evening, he followed up with another sort of social media post. So Fed independence really is in focus, and of course, markets don't like it one bit. So as I said, all equities sold off. Equities, bonds, dollar. Equities, of course, very sharply. 2.3 lower on the S&P. Nasdaq down 2.5%. The 10-year yield was up 9 basis points, 4.4 on the long end. Dollar index 98.35. And we were down 0.5%. VIX back up about 14% to almost 33. I mean, all of this, of course, these are large moves, but in a slightly muted fashion because volumes, because of these global holidays, were on the lower side. People are just coming back from their longish weekends, Easter weekend. Gold, of course, is the clear beneficiary, and that's the other thing, right? All US assets, all paper assets are selling off, and you got gold, which is a hard asset, which has climbed another 3%. Yesterday morning, I put out the fact that since the tariff pause, gold is up 8%, make that 11% now with last night's 3% rally. Now, it's not just gold, by the way. Silver is doing well as well, and we'll talk more about this with Manisha. And of course, I mean, gold is sort of seen as the safe haven, and there is that safe haven buying element which is kicking in. Oil prices down 2, back to about 66.65. We'd gotten to about 68 in the recent high. Just some bit on this tariff news flow. The USTR, US Trade Representative, has said that US-India are negotiating well. But if you look at the currency, the USD INR, which is very well traded, in the NDF markets, they won't change at all. Most likely, I mean, it looks like President Trump wants to be involved in the deal. I mean, once it's kind of sort of finally through and he wants to be involved in some way. And no real timelines to this. And of course, tariff and trade headlines will be market moving. They remain important to note. So I'll just sort of circle in the level. There were, of course, there's more good news, which we will talk about in terms of the banking space with those LCR norms, better than what was expected earlier and expected to add more liquidity to the market. So I said this yesterday morning as well. The mood is quite constructive. So the upside level for the Nifty is 24,546, which is nothing but a simple 61 point. We crossed 50% yesterday. 61.8% retracement of the full fall from the highs in late September, October last year to the lows in March this year is 24,546. I mean, that's like the Lakshman Rekha. And then, of course, kind of look ahead into all-time highs, etc. Support zone 23,800 and 23,850 on the downside. And the 40 hourly is also close by. So I'm just laying it out there. So 23,492 is the 40 hourly exponential moving average. Nifty Bank, of course, yesterday made a new all-time high. It hit the first extension level which we put out, which is 55,474. The next level is 56,631. Our indices stretched, most definitely they are stretched. They are overbought. I look at RSI and other technical readings and things are overbought, and we are due for a pause, a correction, a slightly more sideways market because, I mean, it's been one way, about 2,300 points in the Nifty to begin with in about 6 sessions flat. But will we get that today is the question. Support for the Nifty Bank, 54,407 to 54,674. And again, like the Nifty, the 40 hourly exponential is close by to those support levels. 53,246 is that number. GIFT Nifty will come up on your screen. It'll give you a quick sense of how we're likely to start. 35 points higher. Surbhi.
Absolutely. So in Asia is a little mixed. By the way, on the US-India trade deal, I think children are a very important part of diplomacy now, aren't they? It was very, very cute Vance trio, the 3 kids over there. And they're all over. Look at global media headlines. Look at pages across international websites. And Modi and Vance and Usha Vance along with the kids.
I heard he's packed a lot of stuff for the kids.
Yeah,
as he goes from nation to nation. He was changing the outfits.
All the outfits and everything. It's extremely cute. Cute diplomacy, so to speak. But okay, let's talk about the post that completely derailed the market. So just in case you missed what he was exactly trying to say and why is Donald Trump calling Jerome Powell a loser. Here's the context. Let's pull up the post as well. Trump is arguing that inflation is not rising in the US. Look at what he's saying. He's saying with energy costs way down, food prices substantially lower, and most other things trending down, there's virtually no inflation with these costs trending so nicely downward. Just what I predicted they would do. There can almost be no inflation. And then we come to the operative part. He says, but there can be a slowing economy unless Mr. Too Late, a major loser, lowers interest rates now. And this is what the market did not like. The terminology, the tonality of it, and the fact that this is just getting, extremely abrasive perhaps at certain levels. And remember, Mr. Kevin Hesset earlier last week had said that they're still, checking on the possibility of whether dismissing Powell, dismissing the Fed chief is an option at all or not. So that continued to rattle through the markets. Of course, Wall Street was lower, like we've been telling you. The Magnificent 7, they led the declines on Wall Street yesterday, down between 3 to 6%. Tesla earnings, by the way, are in focus. Tesla was down ahead of numbers yesterday as well. Asian markets, now what are they doing? Cautious, yes. The mood is very, very mixed out there. You've got markets going all over the place. Japan's absolutely flat. Hong Kong is slightly lower, about 0.5% lower. Mainland China is about 0.25% higher. Singapore is actually shrugging this off. It's up about 1%. So short point, Asia is very mixed. What, however, is continuing is that move on gold, because in Asian buying this morning, gold has climbed up even further. So beyond 3,400, now we're looking at levels of about 3,465 thereabouts on gold. Yeah, 3,460 right now. And not just gold, the Bitcoin is moving higher. This whole move away from US assets, US bonds, equities, US dollar, it seems to be supportive of Bitcoin as well as gold. Now coming to the market here, the Indian market has been moving on steroids, rock steady, outperforming, which is why my piece this morning was titled, Can India Remain Decoupled from These Concerns on Wall Street? The Nifty is trading above all the key daily moving averages, 20, 50, 100. Yesterday took out the 200-day moving average as well, backed by very strong flows, as you can see the picture. Once again, 4th consecutive day of FPI buying. Almost 2,000 crores of buying took place yesterday from the FPI side. Domestic institutions were more muted at about 250-odd crores. No problem on the macros. We've got the 8 core sector industries data out, 3.8% versus 3.4% month on month. So sequentially, there's a small improvement. Now, banks are turbocharging this Indian rally. And yesterday, there's further good news coming in for banks. The RBI's final LCR norms, they're not as onerous as what the draft proposal had indicated. And what they're saying is that this runoff factor, basically the LCR that has to be maintained for internet and mobile banking retail deposits. I mean, what happens if very quickly we press a redemption request on our mobiles? That factor is up by 2.5%. It was supposed to be earlier hiked by 5%. So that's why it's less onerous. And the amendments are not coming into effect immediately. It's full 1 year away, 1st April 2026. That's the other good news. And the RBI itself is saying that all banks, all scheduled commercial banks would be able to meet their LCR requirements very, very comfortably. That's good news. Very quickly, to just put the rally, the financial rally in context, it's across the board. Financials, banks, non-banks. Look at the capital market plays up 9.4% in this month of April on the Nifty Capital Markets Index and the other index as well. Nifty Financials is up about 5.4%, bank 7%, private bank. It's all moving higher. Along with banks, watch out for the metal space as well, because the news is finally official. This 12% safeguard duty on certain steel products, it's finally come through. It's been known to the market, but maybe we get another sentimental pop. Let's see. So that's something in focus. And then, of course, as always, earnings to keep us very, very busy today is HCL Tech, Havells, Cyient, Delta Corp, there's M&M Financial Services, and Wari, to name a few. So lots of large caps and some interesting mid caps as well. Nigel.
Well, that's right. The FIs, they have been buying in the cash market, and they have been adding longs as well in index futures. And that's precisely that happened yesterday. They added close to 6,500 long contracts. They're still net short with 68% of their positions on the short side, while the net short positions have come down to around 77,000 contracts, which means a decline of close to around 40,000 contracts from the peak we saw of around 115,000 contracts earlier in the series itself. So the FIs net short, the short positioning has come down drastically. The client positioning, now this is quite interesting. The client net long positions have come down from around 43,000 contracts. They've come down to around 8,000 contracts or thereabouts. Remember, the clients have been the ones that were adding long positions when the markets were declining, and they've been getting it right. And they haven't got net short all the way since October 3rd, 2024. So I'll keep an eye out on the client positioning. Sometimes, when they turn net short, we do see some bit of consolidation, some kind of a pullback. So that's the big question, right? Are the markets due for a bit of a consolidation phase, or maybe a mild pullback? Maybe a percent or so higher from here, but then we could run into resistance. So clients, they're net neutral on index futures now, only 8,000 contracts on the long side. And you have the RSI, both on the Nifty and the Nifty Bank, they have moved up. On the Nifty Bank, it's got into the overbought zone at around 75 odd, while on the Nifty, it's hovering around that 66 odd mark. Some headroom towards that 70 mark, but the RSI as well has moved gradually towards the overbought zone. Moving to the options data, and that's important because you have expiry that will play out in the next couple of days. Two strikes fairly active, 24,200 call, 24,000 put. You plug in these levels, you look at the previous resistance levels, and you'll see that the earlier resistance at around 23,800, that will become a bit of a support now. So that's the important mark you're looking at. On the downside, you don't want this to break. Well, the resistance will come in at around 24,300 because that's what the options data is telling us. The RBI have gone ahead. They have revised the LCR guidelines, and they're much better than what the draft has suggested. And because of this, there could be a liquidity infusion into the system to the tune of around 2 to around 2.5 lakh crore, which will be good news for the banking names. So we'll keep an eye out on that. That's the one that's been leading this rally. Keep an eye out on the Nifty Bank. But just for today, given that the global markets are in a bit of a flux, I'll keep an eye out on the consumer sector as well as the FMCG names, because UBS, they have gone ahead, they've upgraded a couple of names in there, and notably Colgate as well as Britannia from sell, they have moved it to buy. So I'll keep an eye out on this pack. It's protected from the broader market, from the global volatility. So we'll keep an eye out on both these two names as well.
All right, Nigel, thank you very much for that. So that's the sort of roundup as we see it. By the way, news at the bottom of the screen, I'll just make a quick mention of it and then Nimesh will take it forward a little later. 361, we reported this first on D Street Chatter that there perhaps could be a strategic entry of a large foreign global MNC into the wealth management business, which is 361. So the deal has come through and 361 will issue 2.05 crore warrants to UBS at 1,030 rupees. Stock closed at 954 yesterday, and warrants will be convertible into equivalent number of shares in 18 months. So we'll put out exact numbers in terms of percentages, etc. They're going to acquire India wealth business and stock broking services and distribution business. So, we'll look at this one in greater detail with Nimesh, as I said, in just a bit.